Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Markets overnight were relatively whipsawed as the US dollar, which measures the greenback strength against a basket of six major currencies, rose as investors assessed the significance of the minutes from the latest US Federal Reserve meeting, which revealed most central bankers backed its recent quarter point increase, but some favoured a bigger rise. The summary of the Fed's latest policy meeting, which ended on the 1st of Feb, revealed that almost all officials backed its decision to raise its benchmark interest rate by a quarter of a percentage point. However, other policymakers wanted to see more proof for easing inflation, as they still feel it's too high and that the interest rates need to rise further. A few officials even said they preferred raising rates by 50 basis points at its latest meeting, doubling the size of what the Fed actually did of 25 basis points. Participants noted that inflation data received over the last 3 months showed a welcome reduction in the monthly pace of price increases, but stressed more evidence of progress across a broader range of prices will be required to support inflation was on a sustained downward path. Annual US consumer inflation came in at 6.4 in January, easing from 6.5 in December, a sharp decline from the 9.1% yearly gain in last June, which was the largest since November 1981. Investors are now penciling in at least 2 more rate hikes for this year of around 25 basis points. However, some officials, as I mentioned, are discussing the possibility that the Fed should consider increasing to 50 basis points. The US Federal Reserve has lifted its main overnight rate to a range of 4.5% to 4.75%, which is nearly virtual from zero at the beginning of last year. Looking ahead though, there's still a whirlwind of events, with the second estimate of the US gross domestic product, which is the GDP, in the fourth quarter. That's on Thursday, and the personal consumption expenditure, or the PCE, which is due on Friday. The PCE is the Fed's preferred measure of inflation, so keep an eye on that number. It is important. So looking at the technicals, we can see that the Australian dollar has plummeted and taken out the level around 68 cents, but not closed under there. In light of the pattern, though, we are still maintaining somewhat a heavy stance due to the ADX now trending to a bear case and both the indicators supporting a bear case. So I'm keeping an eye as the market may slip towards 67.45 with the objective around 66.5, with the top side cap for the intraday view of 68.55. As the dollar surges higher, around 104.44, the market found further weakness in the euro and now takes out the support level of 106.20, which has revealed the next path down to 105.70 to 105.25 and reassess from the bottom side of that range. The ADX is trending to a bear case, and also the RSI and MACD are negative. The dollar yen still edging higher, with the ADX supporting a bullish case, and also with the indicators view the market should eventually reach an objective around 135.45 to 136 and reassess from there. Any pullback views support around 134.25 on the day. Having taken the challenge higher, sterling got into a slight bearish tackle and found the market has actually fallen. From the decline, puts the market back on focus around the region of 120.10.15 to around 119.45 as a base, but overall still locked in the parameters of 119.45 to 121.75. Gold still maintains its bearish case as it now tackles the level around 1,820. With 25 being the low on the day, still looks further weakness, and a break of the level of 1,820 would reveal the next move down towards the region of 1,786 to about 88, or around that bottom side of the range, due to the heavy indicators and also a bearish trend. Keep an eye on this level. It is a key point. We did see a rejection and posted a hammer, but failing the confirmation to the upside, the market's returned and now pressuring this support level. Finishing up with oil, the market crushed the level that was at 75.60 and now reveals the next target of 72.40.60. In light of the pattern, we can still see further weakness as the trend is bearish and the RSI is married up to the MACD. So let's see if the target can be reached. Do be on your guard, because previously from this region, around 72.40, we did get a correction, and we may do so again. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look after the interest rate, Paul. I hope you enjoy the great start to the day.